Good evening, and today is February 9th, 2024, and it's Friday. So this end of day review for this Friday, the last trading day of this week. Basically, we have is another Friday that is rally, right? Last week, the Friday is rally, but this week the market continue rolling, but the volume is up low, 63 million share right there. So basically, it jumped today. It jumped $2.88, about 0.58%. All right, let's look at the charts, right? So right here we see this is the gap up. It opened. Right, this is the yesterday close, the start Friday. So it's gap start open above, and then it's going down to fill out the gap. And the gap for today is about 52 cents. So gap up, refill the gap, and continue to go up. It retests that gap a little bit right here at 950, so that is a good entry for it right there. Right, so if we want to entry, we would apply stop loss at open right there. You see that? That's a good setup for us right there. Yeah, we didn't recognize this until we do the review now. So that's the reason why I want to do the review, give us some different perspective at the end of the day. Because at the real time, we may caught up with something that we don't see as. So basically, the pattern for today is gap up, but the gap up is not really big at all. Gap up, right? And refill the gap and go. Yep, right here we can see that this is a bullish breaker right here. Bullish breaker, and you have the gap right there, and retest of that gap, boom. That is a setup that we are observing right here. But yesterday we see that yesterday is swinging both ends right there. Both end of DR is swing 1 point standard deviation to the low, and then it hit 1 point standard of the upside, right? And then from there it pull back right there. But like we see that it will never hit this sell liquidity. That's the question we ask, why it not hit in this sell liquidity, but it dropped this sell liquidity and boom, it go up from there. Yeah, this it can trick at the 4 breakout right here. Yeah, that's the level. That's the reason why. Right, we have 4 breakout at this level. That could be the reason. Right, we have 4 breakout right here. So the low of the candle is 497.91. Exactly. All right, 4 breakout right here. and it retests that for breakout again, and it's strong move up, leave the gap, retest the gap. Yeah, we can do like this, right? And we can see that this is a real breakout. Oh, yep. So right here, what is the high? No, we do real breakout right here. Yep. Yeah, this is the level. What is the high of it? 498.39. So it's 4 breakout at the level, but it's real breakout at this level. So it's 4 breakout at 497.91, but it's real breakout at 498. What is the exactly the high of it? 39, not 40. So 39. So they all breakout level, right? So this basically this become a resistance level right there, right? It make look like it's gonna be a fall break. It's gonna be breakout to the outside, right? But it's not. It go back and it break the sell side and it come down, retest again, and it make a high low and then boom, it break out this level. And you see that when it retests, it never touches the level. That means this a very strong support level right there, and you see the jump right there. And this retest into this gap show us that this gap will never get filled because this is very strong support level right there. So today before give us some idea that it swing both it rate the buy side, sell side, and then it kind of rate the sell side first and rate the buy side, and then it retreat, pull back, and then it will ready to rally or ready to shoot up right there. So how do we frame our trade right here? Yeah, you see that there's a gap between the one standard deviation yesterday, the day before, and the retest is not even touched that level, so it's very strong right there. So let's frame this trade right. $9.50. So it's 4 breakout at this level, so it's a resistance level right there, and real breakout at this level. Wow, what a setup. So we call this a gap up, right? It not completely fill the gap, right? but it's an idea that gap up and retest the gap and then rally up. That's an idea. Entry times 0955.50. So the condition it does is a 4 breakout at 497.91, but it's a real breakout at 498.39. Yeah, we have to say something about how we enter right here, right? So basically we put in a buy stop at the open 930 right there. When we see this open above, right, that's the signal right there. And then when it go down to retest the open right here, we put a buy stop right there. Remember that the candle 0955 is open above the open at 0930 right there. Gives you a strong signal, right? Yep. Go up, retest the gap, and rally. It's just retest the gap, not get filled at all. And it doesn't need to be filled because too much, I don't know, too much buy side already, right? We can say that. The gap up is not really significant, but it's a long setup, right? Oh, 950, and the target will be one standard deviation right there. No doubt about that right there. Okay, let's see that when we are what setup we have for today. Okay, at 11:15, right, we have a setup. Oh, short setup. Yes. So we have a short setup, the target very precise. You see right there, right? You have breakout level we identify right there, right? And the next candle is open at 11:15, right? Open above right there. So this trade is very interesting, right? Because the market's rally and we try to short them. That means the target very precise. We have to execute exactly, otherwise it will blow back on us. Right, the idea is that the sell stop at this level right here. And the entry time is 11:15. And we target the mid-range right there. So we have reached the wall 1, 2, 3. which is very good risk reward right there, risk reward ratio right there. And you see that right here, when it retest exactly, you see the low of it is 32, which is 32 right there. If we fail to exit the trade when hit target, we have low back right into our face right there. Right, we choose this level at a 4 breakout right there. Is this level at 1050? Right. Yeah, 502. Let's see. 502. Let's go back to the screenshot, right? Yeah, 502 right there. So exactly at this candle, 1050. Yep, so break it down. It's just a very quick trade right there, and we have to get out. When we watch in real time, this whole candle is just down close. We thought that it's gonna be follow through and a big sell-off. But as soon as it hit the target, it gets rejection right there. And it retests one more. Then we have the heel rally, and that's where we have a long setup 10:05, no 12:05 or 12:10 right here. So right here we have a long setup, right? Because it's retest the mid-range, just touch that, and it have a huge rejection, and it retest again, it had a rejection and made a higher low. That give a signal to go long right away. And our target gonna be 0.5 standard deviation right there. We failed to reach when it make a high around 11. But if we are let it run, it go all the way to 1 standard deviation right there. You see that? So this trade is 1 to 2 risk-reward ratio. So basically, when we see this is a 4 breakout level, we put a sell stop right here. The buy stop, and it carry it into the trade. And if we let it run, right, we just conservatively we aim at this. But if we let it run right here, right, our trend tree level is at this. Yeah, we can see right here. Yep. Yeah, we can use this level. Yes, this level. Actually, we would use this level. In the screenshot, we use the close or the open of the candle, but it's better to use this candle, right? Because it creates a 4 breakout. 56 right there. Yeah, we can go in at 12:05 or 12:10 right there, because we see rejection and it close above this level. And if we let is run right, our first target right here, right, we got 68 1 to 2, but if we let it run to 1 standard deviation, and we only reach what we reach from here to the low of here. 22 cent. It's 125 right there. So it's 122 and then it's 125 ratio ratio. So that's a huge, trade there. Yeah, let correct this. Right, let's. So yeah, when it open above, go back, retest, we can enter right there. So it's a full breakout at that level, but a real breakout at this level. The same right here, right? Full breakout on this level, but real breakout on this level. The same right here. Full breakout at that level and real breakout at that level. As soon as we saw a direction and make a high low, then we go in right here. Yep. So we put a buy stop at 499.56. Entry time 12:10 dollars. DR and risk reward ratio, we have 1 to what? 1 to 5 right there. So right here basically we have a rejection, right? Plus a high low. That's mean a bullish signal to go along way there. So basically long. Yeah, so we have a redone of the swing shot before, right? It's after work anyway. Yep. And then we have another, no. Yeah, we may have a short setup right here, right? But at this moment, the market is not gonna make any move, right? You can short from here, the gap right there, but it's not make moves. It's not worth it to go in short right there. All right, I think it's this much for the setup for today. But remember, next week gonna be a CPI on February 13th, which is Tuesday. But look like the market set up gonna rally, huge rally. And look at that order gap up. Very interesting to see. They say they're gonna pump the market for the next 6 months. Let's see how it's play out. Because this year is election year. And so this is a 4-hour time frame. Right. We don't see any setup really tell us to go long. Right, it's all above there. We don't want to chase them. At the same time, we have to restrain from the short. Because if we go short, when the market keep rallying, we will get roll over. So we have to be on the right side. But look at the today, right? If we put back the pre-markets, you can see that, right? So you see that right here, huge candle right here, and then huge candle close up. So basically, they want to balance the liquidity right there, the market maker. That's the idea, right? The market maker run the market. They provide liquidity for both sides, right? And when we are trader and speculator collectively bet on the market, then whatever liquidity imbalance on that at that moment, it will make the market move right there. So right here is the 1 hour chart right here. Okay, so we can treat this a 4 breakout level. Let's see how it's gonna play out next week. Okay, let's mark it 1. The high of this 50108. Yeah, let's treat this at a 4 breakout because have a up close candle like auto block, and that you have a doji, and then after that it moving down. Let's see. Actually at the end it tried to fill this gap, very strange, but this level is going to be very interesting to watch for next week. Yeah, this level right there. Hold on. Did we do, what's the high of this? 08? Okay. We missed by 2 cents. No wonder it's not, line up. Now it's left. It's line up with 1 minute, 5 minute time frame right there. So we can treat this as a 4 breakout. And want to see how it play out for next week. We have 2 more minutes, so take a look at the daily time frame. You see, wow, look at that. Start from October. Look at the percentage, how it's increased from November. Wow, keep rolling. You see that? So increase about 22% from the low. Wow, look at that. Probably 22%. So is that a bear market? We don't think so. It's not gonna bear markets. Lots of people want to try short them and get short switch right there. But you never know. The market probably beyond, your reasonable. Until it stop rallying, then that's the story right there. So 22%, roughly. Yeah, we can treat this at 4 breakout level. See gap right there. Very interesting thing. All right, we wrap up right here. And have a wonderful evening. we only grateful for this opportunity. Appreciate we doing what we love. Opportunity will, success is coming our way. Bye for now.